We are now live.
Thank you. Good morning and welcome to the slightly delayed meeting of the Pensions Committee. I am James Walton, Director of Finance, Governance and Assurance at Shropshire Council and the Pension Scheme Administrator for the Shropshire County Pension Fund. Can everybody hear me? Okay, I'll continue. I am obliged to inform you that this meeting is being live streamed and recorded. Members of the public will be able to hear the audio of the meeting and view the papers shown on the screen. This meeting is being held using remote technology, and should any committee members experience technical difficulties during the meeting, for some reason I have a delay for about 1 minute after I started. So could I hand over to Justin? Would you mind reading out the start of the meeting, because I think the technology is breaking down on me.
James, do you want me to pick it up? Me? James, pick it up. Just instant. The meeting is being held using remote technology, and should any committee members experience technical difficulties during the meeting, they should immediately contact the designated IT officer on the number they have already been supplied with. Everyone is requested to mute their microphones unless asked to speak. Please only use the chat function to indicate the desire to speak. Do not use it for anything else, so that it is clear who is asking to speak, and the debate has to be heard by those listening to the audio feed. The Chair will interpret the Council's existing standing orders in light of the requirements of remote participation, with advice as necessary from the Section 151 officer prior to making the ruling. At the start of the meeting, members will be asked to confirm their presence and any disclosable pecuniary interest that they have in any of the items on the agenda. Everyone that speaks during the meeting, including members of the committee and officers, are asked to introduce themselves each time they speak. This is so that those listening know who is speaking. We'll now move to the roll call and disclosable pecuniary interests. Members are reminded to disclose any pecuniary interest in any matters to be discussed which is not included in their register of interests, and leave the meeting by switching off their camera and muting their microphone prior to the matter being discussed. I will now read out each member's name and ask them to confirm presence and confirm if any interests. Thomas begins. Councillor Biggins, could you confirm your presence and whether you have any interests?
Present, no interests.
Councillor Chris Mellins.
Present, no interest to declare.
Councillor Brian Williams.
Present, no interest to declare.
Councillor Michael Wood. Councillor Wood. come back to Councillor Wood. Councillor Ray Evans.
Present, and I'm assuming that being a member of the pension scheme doesn't count as an interest.
No.
So I have no other interests.
Jean Smith. Jean with us. Jean's not actually in the meeting yet, so we'll come back to that. Laura Hoskisson.
Present, no interest to declare.
Can I now ask officers and advisors present to introduce themselves, please? Start with James Walton. Yeah.
Hello? Hello, I've just rejoined the meeting. Apologies.
Thank you. Justin Bridges.
Yes, present.
And that's all the officers present. Advisors now. Louis Paul Hill.
Hi Tim, yeah, present from Aon. I may also be joined at some point by Charles Iverson and Jonathan Taylor from Aon.
Thank you. Valborg Lai.
Good morning, everyone.
Yeah. And Amelia Gaston.
Good morning.
I've just seen that Jean Smith has joined the meeting. Jean, can you confirm your presence and that whether you have any pecuniary interests? She's there. Jean, are you there? We'll come back to that. We'll now move on to the election of the chairman. Are there any nominations for the position of chairman?
I nominate Councillor Biggins, Brian Williams.
Thank you, Councillor Williams. Is there a seconder for that nomination?
Chris Mellings, I second that.
Thank you, Councillor Mellings. Are there any other nominations? Right, we will now take a vote on that to confirm that. I will read out councillors' names and ask them to confirm whether they are for or against that proposal. Councillor Thomas Biggins.
For.
Councillor Chris Mellings.
For.
Councillor Brian Williams.
For.
Councillor Michael Wood. It's Michael again.
For.
Councillor Ray Evans.
Abstain.
Thank you. That is carried. I will now pass over to Councillor Biggins to take the chair.
Okay, thank you very much. There's
Lost you, Tom.
Okay, thank you very much, members, for...
Tom, I'm sorry to interrupt you, but it's Michael Wood. I'm just having struggle getting into you, and I've got IT on the phone at the moment.
I'm also having sort of a double talk. It's almost playback, sort of 10 second playback.
Hello, it seems as though a lot of us are having troubles. It's not just me. I've got Yeah.
Okay, I think we just adjourn for a couple of moments.
Okay. That looks as a Tom, that Chairman, that looks it looks as though I'm back in now. So allow me to go off and proceed with the meeting, please. Thank you. Thank you. Is anything going on?
I think we're just waiting for the chair. He's just adjourned for a few moments.
Oh, okay, can everybody hear now, and has the interference now gone?
We can hear you perfectly, Tom.
Okay, thank you very much. Well, first of all, thank you very much for electing me as chairman of the Shropshire County Pension Fund. Before
I'm afraid you've gone again, Tom.
you can hear me, but I'm getting interference.
We can hear you intermittently.
Okay.
Before
moving on to the agenda, as chair of the pension committee, I would like to make a statement.
Gone again.
Okay, I think, Tom, as your chair, when we're having these problems, I think it may be that you need to leave the meeting. We will just adjourn the meeting for a few moments and get IT to log you back in, and then we'll continue with the meeting.
Okay, I'll do that. Yep.
Can I remind members that the meeting is still being broadcast, even though it's been adjourned?
Thank you, Julie.
Hello, can everybody hear me clearly now?
Clear,
We can
Chairman.
hear you, Tom.
Okay, thank you. Well, we'll continue then. Well, firstly, thank you, members, for electing me as chairman of the Shropshire County Pension Fund. Before moving on to the agenda, as chair of the pension committee,
Frozen again.
Okay, we're still having some issues with the chair's audio. I can see that IT are now trying to sort it. So we'll just have to wait another few minutes if that's okay. Apologies to everyone for the technological issues we're having this morning.
Oh, Debbie's in now. Debbie in now? Oh, yeah.
Okay.
Good morning again, Chair.
Good morning. Many apologies about this. It's a major technological issue. Anyway, continuing. First of all, thank you members very much for electing me as chair. Before moving into the agenda, as chair of the Pension Committee, I would like to make a statement. As you are no doubt aware, Shropshire Council at its council meeting last Thursday agreed to support a motion which included a request for the pension fund to divest from fossil fuels within a 3-year time frame. Just to confirm, to date I have not formally received a letter from the acting chief executives as outlined in the motion, and the item does not appear on today's agenda for further discussion. I would like to inform you that as chair, I take this matter very seriously, and over the next 12 months, I will ensure the information contained in the motion is discussed in detail with Pension Committee members and advisors and our responsible investment and engagement managers who are experts in this area. At today's meeting, we have a presentation from LGPS Central regarding climate stewardship and their climate risk monitoring service, which is just the start of the discussions the Pension Committee members need to have on this important subject. The fact we already have this item on the agenda highlights the importance of climate change stewardship and engagement. A detailed report is already being prepared by LGPS Central, which will be presented at the next committee meeting on the 18th of September, when these issues will be discussed further. This climate risk report is designed to assist Shropshire County Pension Fund in identifying financially material climate-related risks and opportunities, estimates the potential impact on returns from different climate risk scenarios, and carries out carbon footprint and stranded asset analysis and clean and renewable energy analysis, to name a few of the items to be covered. I felt it was important to make this statement at the commencement of the meeting to demonstrate our commitment to this important issue, despite the fact we have not yet received a formal request, nor have time on the agenda to discuss further today. Item 2 on the agenda is apologies. Can the committee officer confirm if there are any apologies and substitutions, please?
Thank you, Chair. We've received apologies from Councillor Malcolm Smith, and there are no substitutions.
Thank you. Item 3, appointment of vice chairman. Are there any nominations for the position of vice chair? I would like to nominate Councillor Malcolm Smith. Can I have a seconder, please?
I'll second that, Chairman. Councillor Michael Wood.
Thank you. Are there any other nominations? Very well. We will now take the vote. I will ask the committee officer to read out the names of the committee members present and entitled to vote on this item, and then confirm the result of the vote.
Thank you, Chair. Councillor Thomas Biggins.
4.
Councillor Chris Mellings.
4.
Councillor Brian Williams.
4.
Councillor Michael Wood.
Sorry about that, Chairman. 4.
Councillor Ray Evans.
Abstain.
Thank you very much. Well, in that case, Councillor Malcolm Smith is duly elected as Vice Chairman. Item 4, disclosable pecuniary interests. This has been dealt with during the initial roll call of the meeting. Item 5, minutes. To confirm the minutes of the meeting held on the 24th of January. As Chair, I move that the minutes of the Pensions Committee meeting held on the 24th of January 2020, as circulated with the agenda papers, be signed as a correct record. Can I have a seconder, please?
Brian, I'll second.
Thank you. I will now accept these minutes as a true record unless anyone else indicates differently. Very well. We'll now move on to item 6, public question time. The following public questions have been received. I will introduce each question and then ask Justin Bridges to read the question out. I will then ask James Walton to read out the prepared response before moving on to the next question. And I believe we have a total of 4 questions in all. The first question is from Peter Welsh, Una Menges, Claire Cooper, Mike Watkins and Kate Griffiths. Justin, would you kindly read their question out?
Thank you, Chair. I am a resident of Shropshire paying council tax. I have recently learned that Shropshire County Pension Fund considers me to be a stakeholder in the fund. Could you please tell me exactly what this means? What fiduciary duty does the fund have towards me as a stakeholder? As a council tax payer, does this mean that some of the money I pay in council tax ends up in the pension fund through pension contributions from the council as an employer? If the pension fund finds itself in financial shortfall, will I, as a council taxpayer, be funding this shortfall through taxes, either through Shropshire Council tax or from government taxes if the fund requires government assistance?
And James Walton will give the reply.
Thank you, Chair. Shropshire's residents are not stakeholders in the fund. Pension fund scheme members are stakeholders. The council's funding sources are not allocated to specific expenditure items. However, as one element of the council's overall funding, council tax will contribute to expenditure items including employer pension fund contributions and any pension fund shortfall identified as a result of actuarial valuations. As such, it would be incorrect to determine the proportion of council tax that contributes to the pension fund. I'd like to draw your attention to the fact that as a result of the last actuarial valuation, when the funding level increased from 84% to 94%, this has resulted in a saving in the amount paid in employer contributions. Thank you.
Question 2 is from Gillian Davis, Steve Hale, Sue Evans Turner Elizabeth Knowles and Amanda Scott. Justin, if you'd kindly read the question out, please.
Thank you, Chair. In the most recent annual report available to the public, 2018-19, the pension fund's investments in Shell and BP amounted to 27 million. At the recent Shropshire Council meeting, Councillor Biggins stated that the fund's Shell and BP investments total 10.2 million. Can you please explain what has happened to the missing 17 million? Have some shares been sold or have these funds dropped in value?
And James Walton will read the reply.
Thank you, Chair. Our UK equity manager has reduced the size of the position in BP and Shell due to the cash outflow at the request of the fund for rebalancing exercises. The global pandemic in the last quarter of the financial year has had a significant impact on global equity markets, resulting in a fall in share prices globally. This has not just impacted on BP and Shell specifically. In addition, the overall value of our passive global equity managers portfolio, which tracks the FTSE All World Developed Index, has reduced in value in total. This affects share value of all companies included within the index due to the global pandemic. Specifically, in relation to BP and Shell, the combined weighting of BP and Shell as at the 31st of March 2019 was around 1% of the total index. This has dropped to around 0.6% as at the 31st of March 2020. Thank you.
Question 3 from Claire Weirden, Susan Caroline, Richard Davis MBE, Mike Streetley, Sharif Morsa, Nikki Locke, Simon Nightingale, Miss J. Goff, Annette Clark, Judy Coleridge, Isabel Lewis, John Hutchinson, Peter Gilbert, Natalia Gureva, Andrew Dady, Suzanne Freegard, Adam Shipp, Susan Barker, Pauline Wilson, Jill Bedford, Hannah Peters, Callum Phone, Tina Tiaru and Di Hill. Justin, if you kindly read the question out, please.
Thank you, Chair. Fossil fuel investments increasingly pose a financial risk to investors as a result of both COVID-19 and the global transition to a more sustainable economy and environmental model. Renewables now constantly outperform fossil fuels, and investments that exclude fossil fuels have been outperforming those that include them since 2011. See the MSCI All World Ex-Fossil Fuel Index. Given these factors, why isn't the Shropshire County Pension Fund divesting from fossil fuels and reinvesting in renewables and a localised green economy?
And the answer will come from James Walton, please.
Thank you, Chair. Any evidence to support or oppose this point is entirely dependent on the time horizon. If you change the time horizon, you change the outperformance or underperformance. For example, on a 3-month basis, oil and gas has outperformed as the sector has risen from the OPEC price wars and COVID-induced demand reduction. While hindsight is certain, the future is uncertain, and that is why investors choose to diversify across asset classes, regions and sectors. Whilst the outlook for oil and gas may well be influenced by the policy reaction to climate change, it is difficult to argue that much of the performance of the fossil fuels sector since 2011 has been driven by climate risk. For example, the Paris Agreement in December 2015 does not appear to have had a market impact on the sector. The sector's fortunes have varied rather with the emergence of US shale, the Chinese economy cooling, supply side issues, notably OPEC decisions, and geopolitical tensions, among other factors. No index is truly ex-fossil fuels. The top 5 stocks in the index are Apple, Microsoft, Amazon, Facebook and Alphabet. Without fossil fuels, these companies could not power their servers, deliver parcels to customers, or have customers recharge their devices. Between the 31st of December 2005 and the 30th of June 2020, both the FTSE Developed GBP Total Return Index and the FTSE Developed Ex Fossil Fuels Total Return Index have produced a return of around 9% per annum, so are very similar. The passive global equity portfolio the fund invests in includes 100% GBP currency hedging and an equity protection strategy which protects the fund from falls in equity markets between -3% to -27%. This has been of significant importance during the global pandemic. The portfolio tracks the FTSE World Developed World Index. Shropshire County Pension Fund already invests in renewables. Our infrastructure portfolio invests in renewable platforms such as Vena Energy and Clearway and offshore wind in partnership with Ørsted, who lead in offshore wind in the UK and providing green energy solutions. Our global equity managers also hold positions in renewable companies, so it is a well-diversified portfolio. Thank you.
Question number 4 is from Denise Samari, Emma Bullard, Liz Evans, Dougald Peirce, Julie Hughes, Jonathan Lill, Samantha Omega, apologies about that, I'm not sure quite on the pronunciation, John Slowly, Mike Cripps and Fran Hunt. Justin, will you please put the question?
Thank you, Chair. As members of the pension fund, we trust you make sound investments, but those in fossil fuels, i.e. Shell, BP and any others, are financially unsound, as well as morally bankrupt. These companies pollute the air we breathe, and we are wrecking the earth we depend on to stay alive and well. Will you therefore act to retain our trust as pension members by divesting completely from fossil fuels?
And James Walton will put the answer.
Thank you, Chair. The Pensions Committee is currently reviewing its investment strategy in conjunction with its investment advisors. The review is due to commence today at our July meeting and will be discussed further at the September meeting. This review will take into account all the risks the fund has to continually manage, including fossil fuel investments. Updates on climate stewardship will also be discussed at the July and September meetings, where the responsible investment team at LGPS Central, our pooling partner, will be able to share more information from their detailed analysis. It must be noted that almost every company in the investable universe is at present dependent to some extent on fossil fuels. Were the fund to cease investing in BP and Shell, but remain invested in iron and steel companies, construction businesses, auto manufacturers, shipping companies, retail companies, supermarkets, cement manufacturers, airlines, etc., the fund would still be invested in fossil fuel dependent sectors. The fund prefers to engage with the companies in which it invests and influence company behaviours. Following engagement pressure, BP has committed to becoming net zero. Shell has committed to reducing its net carbon footprint by 65% by 2050. Glencore has put a cap on its production of coal. Rio Tinto has committed to carbon neutral growth between now and 2030, and Barclays has committed to net zero. Thank you.
Thank you. We'll now move on to item 7 on the agenda, climate stewardship. Can Amelia, Gaston and Valborg Lai introduce themselves and present this item, please?
Thank you. Can you all hear me?
Yes.
Excellent. So thank you very much for inviting us. And I'm Stewardship Manager at LGPS Central. So my core remit is engagement and voting. And with me is Amelia Gaston. She's one of our RI and engagement associates, and she will share the session with me. And I'd say, just to start off, that we're generally proud to build on the strong history of responsible investment that is carried by Shropshire and the other LGPS Central partner funds. And it's important to us that we continue to build our responsible investment efforts in alignment with partner funds, and this interaction today helps us do that. So thank you very much for the invitation. Can I just check before I carry on whether sort of 25 to 30 minutes is still okay, or whether you want us to shorten things?
I think about 25 minutes should be okay. Yes.
All right, excellent. So we've labelled this climate stewardship, and we'll go through the climate risk monitoring service that will be provided to Shropshire. And Amelia, I call her Millie, will talk to the key elements of that and the process for that project. And as you mentioned initially, later in September, we will be able to provide you with the report and the outcomes of that assessment. I'll also speak to ongoing stewardship efforts that LGPS Central deploys for Shropshire and the other partner funds on a continuous basis. I would say that the climate change urgency is no less urgent against the backdrop of COVID. I hear it referenced frequently too as a twin crisis, albeit with differing time horizons. So just as an example of when we engage, we don't just engage companies, but we also talk to industry standard setters and policymakers to try to influence the rules of the game, if you will. And we have very recently joined with other investors in asking policymakers, both in the UK and in the EU, to plan and execute recovery from the health pandemic that is aligned with climate commitments and ultimately with Paris goals. We held a Responsible Investment Day on the 3rd of July with all LGPS Central Partner Funds, where we did discuss climate change, but also other themes like responsible tax behaviour and good governance, including board diversity, etc. And I think there's probably fair to say that there is a bit of a change in what we call sort of company purpose, and that maybe we're moving away from a shareholder always comes first to more of an outlook towards broader stakeholder interaction and dialogue from companies. They will be expected to do that. I would say that the responsible investment and engagement team at LGPS Central we're in the fortunate position of having a strong network of like-minded peer investors, not just in the UK, but in Scandinavia, in Europe, and further afield. And collaboration is key for us to give clout to those engagements that we take part in, and also helping to shape best practice standards, etc. Forgive me, can I just check? Could you move on to slide 3, if that is possible? Thank you. So, as I said, this session will primarily focus on the climate risk monitoring service and the stewardship efforts. If you look at this slide, you've got a block of 3 green: selection, stewardship, transparency and disclosures. So we'll talk mostly to well, we will focus on the stewardship side, but I just want to remind you that, you know, responsible investment is an approach that we take across the board. So in how we select assets and how we steward them, and then also we place a lot of importance on being transparent. So we regularly report on engagement and voting. We have such a thing as a vote-by-vote disclosure where we're fully transparent on how we cast our votes. If I can have slide 4, please. And I think I'll hand over to Millie there, and then I'll come back later. Thank you.
Many thanks, Lal. So what I'm going to talk about now is just a bit about the climate risk monitoring service. So essentially, Shropshire Pension Fund have commissioned LGPS Central to produce a climate risk report for them. And this report will look at the entire fund, analyse the fund, and assess the level of climate risk that the fund is facing. Please could I ask for the next slide? Many thanks. So first, I'll just run through a bit of background to the report, so what it is and why we're doing it. So the report will use a variety of different climate metrics, all of which will be aligned with industry best practice. And at LGPS Central, we'll then use these metrics to conduct an analysis to decide whether Shropshire Pension Fund bears a lot or a little of climate risk. So the report isn't trying to address the fund's impact on the climate, but rather how climate could come to affect the fund. So essentially, we'll be looking at the financial aspect of it and aiming to address questions such as what is the climate risk facing the fund? Is this risk long term? Is it short term? And what can be done about the risk? So what steps could the fund take to minimise the level of climate risk that it is facing? And in order to answer these questions, we will use two techniques. So you can see them listed on the slide. The first is climate scenario analysis, and this is a top-down method that looks at asset classes and sectors. To contrast this, the second method is bottom-up, and this is the carbon risk metrics. And this will look at the individual companies and businesses that the fund is invested in. So I'll go on now just to talk about these two approaches in slightly more depth. Could you go on to the next slide, please? Thank you. So the first method is the top-down climate scenario analysis. And essentially what this method does is it creates a plausible set of climate scenarios. So we use 3 climate scenarios, and they include a 2-degree scenario, which is when the world is aligned with the Paris Agreement, a 3-degree scenario, which is where we're currently heading based on pledges, and a 4-degree scenario, which is where there is no attempt to limit global warming. And packaged into these 3 scenarios are certain assumptions about the way different asset classes and sectors perform. So in certain scenarios, these different asset classes and sectors might perform either well or they might perform badly. The analysis also uses a number of different time horizons. So we use a 10-year time horizon out to 2030, a longer time horizon out to 2050, and a very long-term scenario out to 2100. And whilst we recognise this is very long-term, we use the 2100 one because a lot of the physical impacts will only begin to materialise over the very long term, particularly, serious chronic physical events. So that's why we include that. And essentially what the analysis does is it will construct these scenarios, so different temperature horizons, different time horizons, and it will say, given the way that Shropshire Pension Fund is invested at the moment, how would it fare given a 2, 3 or 4 degree scenario? And the unit of measurement for this analysis is the percentage of return. So given how the fund is currently invested, if there was, say, a 2-degree scenario, what would be the annual return impact on the fund? And the findings of this analysis, alongside other necessary financial analysis, can then be used to base decisions such as investment and asset allocation. Next slide, please. So the second technique is carbon risk metrics. And whilst I mentioned that the climate scenario analysis was top down, the carbon risk metrics is bottom up. So it focuses a lot more on the individuals, on the individual portfolios and the individual companies. So essentially we'll look at all the fund's equity holdings and we'll analyse the carbon emissions that are associated with each business. And there are 4 key types of metric that we use. So you can see these on the slides. It includes things like portfolio carbon footprints, stranded assets analysis, exposure to clean technology, and climate governance analysis. And essentially what this part of the report will do is use all of these metrics to identify the portfolios and companies that could cause Shropshire Pension Fund some concern. And once these have been identified, essentially we'll look to say, well, 1, what is the risk? And 2, what can be done about the risk? And I'll just add that when we're answering these questions in the report, we'll be aiming to create something that is as useful as possible. So we're not aiming to hand over a report that's full of numbers and very difficult to interpret, but rather we'll be providing the fund with a report that is useful and can be used to base decisions upon. So it'll be very action oriented. Next slide, please. Thank you. So the third key deliverable in the climate risk report is something called a climate stewardship plan. And there'll be a lot more information about what this is when the report is actually finalised. So this plan will be based on our findings in both the climate scenario analysis and the carbon risk metrics. And it'll aim to identify the areas where stewardship can be used to help improve carbon risk management within the fund. So for example, our write-up, so the analysis we do in the carbon risk metrics section and the climate scenario analysis section will identify certain risks within Shropshire Pension Fund. So for example, there might be one particular company that's contributing a significant amount of the portfolio's exposure to fossil fuel reserves. Or there might be one manager with a particularly high carbon footprint. And what our climate stewardship plan will do is draw these things out and then suggest certain actions that the fund can employ to address the risks. So, for example, we might recommend engaging with a certain company or questioning certain managers on their voting records and engagement history. And all of these recommended actions will go towards improving the carbon risk management within the fund itself. So it's a very good means for the fund to show that it's engaged and taking proactive steps to deal with climate risk. Next slide, please. So the final key aspect of the climate risk report that I'd like to touch upon is that it's structured to align with the TCFD recommendations. So I'm aware that quite a lot of you might not know what this is, so I'll just run through what the TCFD is. So the letters stand for the Task Force on Climate-Related Financial Disclosures. And the TCFD was commissioned by Mark Carney in his remit as the chair of the Financial Stability Board. And basically recognising the threat that climate change poses to capital markets, Carney convened an expert group and they came up with recommendations on how climate-related financial disclosures might best be implemented by corporates, asset managers, asset owners and banks. So essentially, they came up with a series of recommendations, and these recommendations have become market best practice for climate-related disclosures. So essentially, if Shropshire Pension Fund were to report against these, it would, in our view, place the fund amongst the most well-regarded in the UK in terms of climate-related transparency. And the climate risk report that we'll provide you attempts to facilitate this. So it's structured according to the 4 pillars of the TCFD, and you can see these on the diagram in the right. So governance, strategy, risk management, metrics and targets. And each chapter within the analysis section of the report will look at a different aspect of these. So we'll have a governance chapter that will provide recommendations on what the fund could do to improve its governance of climate risk. The strategy section will include the climate scenario analysis. The risk management will include the climate stewardship plan, and then the metrics and targets will address the carbon risk metrics analysis that we do. So all of that will come together to provide a climate risk report that's aligned with the TCFD and will put the fund in a very good position in terms of managing its climate risk. So now I'll hand back over to Val, who'll talk more about the stewardship that we do at LGPS Central for Shropshire Pension Fund.
Thank you, Millie. So on the stewardship side, I'd say first of all that we see some interesting developments whereby, for instance, through a coalition called Climate Action 100+ that was initiated in December 2017, and where the main goal is to engage the high emitters and the high users of fossil fuels. And what we're seeing there, so that started, you know, that's sort of, it's got a 5-year time horizon, that project. That engagement project, and we're seeing now that companies are coming to the coalition, seeking us out to hear views on, for instance, best practice for climate policy lobbying. So there's a positive momentum there that I think is critical that we build on. There's also an interesting trend where companies, just in the recent months, are starting to set net zero by 2050 climate targets. For instance, Barclays in the banking sector, we've seen Shell, BP in the oil and gas sector. Rolls-Royce, an engineering company, has just recently set that target, and BHP, a mining company, has done the same. These are just a few, there are more. You could ask, is this greenwashing, or have these net zero ambitions got teeth? And I think it's fair to say that there are some shades of green, and we intend to assess the detail and to stay in very close dialogue and to hold these companies to account. And it's a big challenge both for investors and companies, because we need to make sure we compare apples with apples, and we are also making sure that we've got building robust methodologies and analysis to do that. And LGPS Central is on a steering committee for an initiative called the Transition Pathway Initiative that collaborates with the London School of Economics, Grantham Institute, where you've got experts who can help us do that. So I think there are some positive developments in face of this climate urgency, and I think the fact that companies are setting targets, although yes, we need to check the detail of it and how they're actually going to achieve that, I think it creates a mechanism for accountability. And in the debate of, you know, whether to divest or engage, I would go as far as saying this is the wrong time to sell. We don't have the time to do that. We need to build on the momentum. We are in a very strong position of continuing engagement, and we also don't have any guarantee of those, if we were to sell, whether those buying would be holding the companies to account in the same degree. So we want to keep our seat at the table. So if I can have the slide, slide number 11, I think we've gotten to. This is again sort of the backdrop of why stewardship matters, why we think it adds value, and again in tandem with Shropshire Pension Fund, the other partner fund views, we do pursue a strategy of engagement, and we believe it helps us secure value, grow the assets, and see better corporate behaviour and standards. And since adopting stewardship themes last summer, in dialogue with partner funds, we're devoting the majority of stewardship efforts to 4 themes. And so this is intentional to make sure that we prioritise and stay focused on a selection of themes that are of particular importance. And climate change is one of those. We do have plastic pollution as another theme, responsible tax behaviour, and then tech sector risks. During this session, we'll focus on the climate change aspect, and I'll bring forward some examples of strong engagements that we have ongoing, but I'll also include a few words on responsible tax behaviour before I finish off. If I can have the next slide, please. Thank you. So the why and the how we do this. The slide has got a lot of logos. Some of you have probably seen it before. What it shows is that engagement happens on several levels, and it's important that we do that because that's going to bring the full, shall we say, force and making us able to influence both how individual companies behave, but also what I previously called the rules of the game, how industry standards develop and policy as well. So I won't speak to all the logos, it's just to give you an idea of, at the top there we've got companies that we're engaging with, and then following underneath we've got initiatives that we're very active participants of, and further down at the bottom there we've got the policy engagement aspect. So for instance, the Financial Reporting Council has recently done a revision of the stewardship code, and I think there's going to be more onus on both asset owners and asset managers through that code on what good stewardship looks like. in my view, you could say that you've got good corporate governance through corporate governance standards, and on the stewardship side, it's all about good investor practice, and I think that's captured in the new stewardship code, which also specifically talks about environmental and social and governance issues, and that's a new element to it. And I think there's going to be more focus also on outcomes and not just ticking boxes. So we're active on all levels, and just as an example of influencing what I call the rules of the game, we've given input to a new standard on responsible tax behaviour recently. On the climate side, we have previously signed letters that have gone to EU leaders asking for urgent action to provide investors with long-term certainty through a net zero emissions target by 2050. And as I previously mentioned, we've just now in June and yes, signed 2 letters, one to the UK government and one to EU leaders asking for a green recovery, to use simple terms. During 2019, we engaged nearly half of the companies that sit within LGPS Central Equity portfolios, and we've done that with good help from our excellent stewardship provider, EOS at Federated Hermes. So just to mention that we do outsource engagement and voting and get some excellent help from EOS, and we are in dialogue with them continuously during voting season. I think I call them nearly every day, so we're a demanding client, but we do get a lot of quality from them. Right, so a couple of examples. If you give me the next slide, slide 13, thank you. So I think this is an interesting case that is yielding positive results. We co-filed a shareholder proposal with 10 other institutions in January this year, asking Barclays to align their business with Paris, so its lending activities. We held multiple meetings with the chair, Nigel Higgins, sorry if that's a correct pronunciation, and very positively. And by the way, I would say the tone was constructive throughout these engagements. And then the company then announced very close to their own AGM in May a net zero 2050 ambition, which we consider groundbreaking. Now the shareholder proposal got 34% support, including the abstain votes, which is a very substantial number. The Barclays board themselves also put forward a climate-related proposal, which in the end, I think, didn't actually cause confusion. And by the way, that one passed, so the company, shall we say, owns it. But we think that those 2 proposals complement each other, so we supported both of them. Now the devil is in the detail. How will Barclays execute this ambition? Because they've positively acknowledged investor dialogue, we are optimistic that we can continue engaging them on this. They have said that they will, before the end of the year, come back with detail on the short, medium term targets and milestones that will help them deliver on the net zero ambition. And there are certain sectors which stand out as more vulnerable, and we will pay particular attention to that. Next slide, please. And then I'm hoping we're still okay for time. I'll be wrapping up in a couple of minutes. So if yes, this is a what I would label a an engagement project that addresses the audit of climate risks, and we've been part of a project that's been ongoing for at least a year, where we've engaged both the big auditing firms but also the audit committees of companies including oil and gas majors, BP, Shell and Total. And we're asking for assurances that climate risks are duly accounted for in financial reporting. Now we would expect companies to account for all risks, including climate change, and we uphold that expectation across sectors, not just oil and gas. Very recently, BP announced that they will lower their long-term oil and gas price assumptions used in financial statements, and that directly reflects the decarbonising trends that are happening, and Shell and Total have done similar things in their accounting, which we very much welcome. We are aware that they need to do more, but we think that this is critical, and we're going to continue this engagement project, which is like a, shall we call it a sister to the Climate Action 100+ initiative. Yes. If I can have the next slide, please. Coming back to the net zero ambitions that have been pledged by various companies, there are variations in scope. There are variations in ambition, if you will, as well, and we really need to scrutinise this. And I've got logos on the right-hand side that show some of those companies who have made pledges. Then at the bottom, we've got investor initiatives that we are a part of. And the Transition Pathway Initiative is a critical one, I think, in helping us build the methodologies that will enable us to understand whether these companies are actually on a trajectory in line with Paris, both in the short and the medium and the long term. If we look at Shell, they have very recently updated their climate ambition to achieve net zero by 2050, and they've accompanied that by medium and long-term net carbon footprint ambitions. And they're also, which is interesting, and I think is going to be critical, they're looking to assist their clients in reducing their emissions and fossil fuel dependency. So in their sale of products, they have set a target to cut by 65% by 2050. You could say, is this is it too ambitious? No, we don't think so. We think it's absolutely appropriate, but we think there's going to be a lot of work that goes into it, and there will be a need for more dialogue across a value chain. You've got shipping, aviation, freight at the demand side, and then you've got the oil and gas companies providing it. So we are also part of dialogues that are facilitating that sort of cross value chain discussion, and that TPI is involved in that as well. So I think we'll move on to the next, and which will be my last slide. Although climate change, as I said, is a key focus area for us in stewardship terms, we have responsible tax behaviour as another theme, and I think it's come potentially more. I mean, if you look back in time, maybe you could go as far as saying that shareholders would be happy if companies paid as little tax as possible. And that is changing. I think that mindset is changing. So we want companies to pay their fair share and to be transparent. And I think during the COVID-19 crisis that we are in the middle of, we don't know how long it's going to continue for, but many countries are providing various forms of tax relief to business during this crisis. So I think more investors will take an interest in companies paying their fair share of tax, and to look at the very big picture. We're badly able to handle any crisis, whether it's health or climate, without funding through tax. So we intend to, while this is still a new theme for us, we intend to get heavily involved both on the company engagement side, but also in helping to establish robust industry standards and expectations. Only yesterday I sent in an input to a consultation that was organised by Fair Taxmark, a UK organisation that is, as the name says, dedicated to making sure companies are transparent, set a tax policy and pay their fair share. I think I will leave it there, and thank you very much.
Well, thank you very much for the presentation. I will now ask members of the committee for their comments. Please indicate on the chat function if you wish to speak. Please remember that when asked to speak, members should unmute microphones, state their name and remute on completion. Thank you. Do we have any questions? No, in that case, well, thank you very much for the presentation, and we will move on to item 8, which is corporate governance monitoring. Can Justin Bridges please introduce himself and present this item, please?
Thank you, Chair. I'm Justin Bridges, the Head of Treasury and Pensions. The Corporate Governance Report is a routine report that the members receive each quarter. It provides details of managers voting at annual meetings during the quarter and BMO's engagement with companies. LGPS Central have provided an update on our climate risk monitoring service, with the full report coming to the next meeting in September. They also mentioned the Stewardship Code in their presentation, and just to advise you that the Shropshire County Pension Fund is a Tier 1 signatory to the Stewardship Code. I'm happy to take any questions on the report.
Are there any questions? Doesn't appear to be any on the chat function. So thank you very much, Justin, for the report. The recommendation is to accept the position as set out in the report. Please, can I have a proposer and seconder?
Moved, Mr. Chairman. Councillor Michael Wood.
Thank you. And a seconder, please. Well, I'll second the report.
Chair, I think we have a question from Laura wants to ask.
Oh, sorry. Yes. OK. Yes. Please, Laura, ask your question.
Hello. Sorry about that. I was really pleased to see BP's new targets to going to 2050, and this is sort of the same question as the previous one as well. Net zero carbon is a great goal, and I'm really pleased to see that. Presume, is it too early to talk about how do we then move from a net zero to stopping extraction of barrels of oil, which it's still stating that it's doing? It's just trying to offset that.
If Val or Amelia could pick that up, please.
Yes, OK. So can I just double check that I've understood the question correctly? The net zero goals are very welcome. And then you're saying, could you just repeat the latter part of the question? Sorry.
It's to do with a net zero is great, but a lot of it is offsetting. Or sort of neutralising, rather than going to the core problem of they are still extracting fossil fuels from the ground. Is it too early to talk about how we're going to engage with that?
Thank you for clarifying, and it's a very good question, and I think I was recently dialing into a webinar that was dedicated to carbon capture and storage, and I think and when members of, as I said, Climate Action 100+, that is, you know, the core ask from investors is that companies align with Paris, and there are also companies that are reaching for, you know, 1.5 degree targets, and I I would say that it's definitely a part of the picture, and we are, shall we say, a little wary of companies who might seem too heavily reliant on the various forms of offsetting or for instance, carbon capture and storage. On the other hand, it also looks like that does need to be part of the picture. So we just need to stay tuned to what proportion it could take meaningfully. It's very costly at the moment. But also, as you say, real world decarbonisation is the biggest piece that we would like to see.
Okay, thank you very much.
Okay, thank you.
Any more questions from members? No. Okay. Well, the recommendation to accept the report has been proposed and seconded. I'll now accept the recommendation, unless anybody indicates differently. Anybody indicating differently? No. In that case, the recommendation has been accepted. We'll now move on to item 9, pensions administration monitoring. Can Debbie Sharp introduce herself, please, and present this item? Thank you.
Thank you, Chair. I'm Debbie Sharp, Pensions Administration Manager, and this report updates the committee on the items that are affecting the everyday administration of the local government pension scheme. The report is fairly long, and I'm happy to take questions on it. I just want to add some detail around point 13, around McLeod. McLeod is explained in the report, which is the issue about the equality aspects on the public sector pension schemes when they were changed back in 2013 and 14, when the schemes went to a care benefit, and certain members of the scheme were protected, certain members weren't. That's been called into judgment now, and there it has a consultation came out last week, which was just after I'd actually done my report. So we'll be looking at the consultation of what is going to be the McLeod remedy, and we'll be responding to that consultation, which the timescales allow us to bring it back to committee in September. So we will engage with the chair and senior officers in between times, but we'll pull together a full consultation response and explain the consultation to committee at the next meeting. I just wanted to reinforce the point that McLeod is probably the biggest shake-up of our pension scheme after the transferring to the care, and what it will mean is that probably 6-7 years of processing for anybody who's had membership in the care scheme since 2013 will need to be recalculated, reassessed and recommunicated should they actually be affected by the underpin. So there's going to be a huge resource effect on the administration of these regulations when the remedy is actually legislated. At the moment, all we can do is look into where we think the areas are going to be, but until the legislation is actually reported and in regulations, we won't be able to actually start on doing the remedy for anybody. So I'm happy to take any other comments on the report, Chair.
Thank you very much, Debbie, for that. I'll now ask members of the committee for their comments. Again, please indicate on the chat function if you wish to speak. Please remember that when asked to speak, members should unmute microphones, state their name and remute on completion. So is there a question, please, for Debbie?
Hello, Brian Williams here. I'm sorry I can't bring it up on the chat function at the moment. I wanted to just refer to page 73, which is the same one that Debbie's been talking about, preparing for the McLeod remedy. And quite frankly, that obviously is going to take a heck of a lot of resources and cost to the scheme. when we actually have to carry out the recommendations. But it was further up the page. It's page 73 in our report, and there's an item on exit credits. I'm not familiar with exit credits, and I wonder if Debbie could explain what exit credits actually are. Thank you.
Thank you, Councillor Williams. I'm happy to pick up that question, Chair. An exit credit, certain groups of employers within the local government pension schemes do exit. Bodies that are statutory, like the council, are unlikely to actually exit. But a lot of our employers who are there either as charities or have been taken on service contracts from our scheme employer, like contractors. So if you think of the bin collections, the big contracts that have gone out, but there's lots of small contracts that have gone out from schools as well for catering and cleaning. Those employers come in as admitted bodies within the regulations, and they come into our pension scheme, and we look after the membership of the employees who've transferred to them, who are members of the scheme. At the end of those contracts, that employer, if they don't win the contract again, ceases to be an employer in our scheme. And what we have to do is assess the level of their assets and liabilities, a bit like what happens at the valuation every 3 years. So when their contract ceases, they have to cease to be an employer in the pension scheme. We get that calculation done. There's three outcomes. One outcome is that they've paid for all their assets and liabilities and are at a cost neutral position. They can actually be in debit, so their liabilities outweigh their assets and they owe the fund some money, but also then their assets might outweigh their liabilities. So there could be a position where the fund owes them some money back. So they've paid more in than is needed at that point in time to cover the benefits of the people that were in the scheme or for membership of employment with them. So an exit credit is when you're in that surplus position. And at the moment, the regulations just stipulate that the employer is paid that surplus back to them within 3 months of finishing their membership of the scheme. However, if they haven't actually had full risk transferred to them, so they might have been in a position where their contribution rate was limited to the pension scheme that the transferring employer that had offered the service contract may have picked up some of the cost of the membership of those individuals. So actually, it may not be correct that exiting employer actually has the full surplus. It may need to be kept into the pension fund. So what these regulations do is give us, as administering authority, ability to look a bit more into what should happen should there be a surplus. I hope I've explained that correctly or simply. Thank you.
Debbie, very comprehensively. Thank you very much indeed. I had been looking at exit credits as something which applied to pension scheme members rather than employers, and I couldn't recall any pension fund member having been granted an exit credit. So I was considering it from the wrong angle, but you've now put me straight, and I am very grateful indeed.
Thank you.
Are there any more questions for members? I can't see any, so please correct me if there are. Well, if there are no other speakers, the recommendation is to accept the position as set out in the report. Please, may I have a proposer and a seconder?
Yes, I'll propose Brian Williams.
Thank you. And a seconder?
Yes, Chris Mellings.
Thank you very much, Chris. I will now accept the recommendation to accept the position as set out in the report, unless anyone else indicates differently. No one has indicated differently, so we accept the report. Thank you very much. Item 10, delegated decisions. Can Justin Bridges please reintroduce himself and present this item?
Thank you, Chair. Justin Bridges, Head of Treasury and Pensions. The Delegated Decisions Report, as members are aware, the March Pension Committee was cancelled because of COVID-19. The papers were circulated in advance of that meeting for all members to ask any questions and confirm they were happy to note the reports and approve all the recommendations. The Director of Finance Governance and Assurance under emergency powers confirmed all decisions have been agreed. This report is just for members to note and for it to be formally noted in the minutes that all recommendations were approved and all other reports were noted. Thank you.
Thank you for that. Are there any questions, please, from members? No. If there aren't any questions, the recommendation is to note the report. Please, may I have a proposer and seconder?
Support, Chairman. Proposing Michael Wood.
And a seconder, please.
I'll second Brian Williams.
Thank you, Brian. I will now accept the recommendation to note the report unless anyone else indicates differently. No one has indicated differently, so thank you very much. We now move on to item 11, the exclusion of press and public. I move that under paragraph 10.2 of the Council's access to information procedure rules, that the proceedings of the committee in relation to the following agenda items shall not be conducted in public on the grounds that they involve the likely disclosure of exempt information as defined by the categories specified against them. We will now take the vote. The committee officer will read out the names of the committee members present and entitled to vote on this item and then confirm the result of the vote. So over to Tim Ward, please.
Thank you, Chair. I will now read out the names and ask you to vote for or against. Thank you. Councillor Thomas Biggins.
For.
Councillor Chris Mellins.
For.
Councillor Brian Williams.
For.
Councillor Michael Wood.
For.
And Councillor Ray Evans.
For.
Thank you very much. I just need to then confirm that the vote has been taken and passed to exclude the press and public.
Thank you, Chair. We'll now end the live meeting.